Hello, everyone, and welcome back to Daily Dollars. In today's episode, we are unpacking the major shifts and big changes in Social Security that are already in motion as of 2025. As we know, one major bill has been signed into law, and several others are making their way through Congress, each with the potential to reshape how Social Security works for current and future beneficiaries. From boosting monthly payments and updating outdated rules to removing certain taxes and making the entire system more efficient, the stakes couldn't be higher. And it doesn't stop here. There are also major leadership and operational shifts happening behind the scenes at the Social Security Administration that could change how benefits are managed for years to come. So what does all this mean for you, your benefits, and for the future of Social Security as we know it? Stick around. We are breaking it all down. Before we dive in, take a second to hit that like button and subscribe to Daily Dollars so you never miss any Social Security update. Alright, let's get straight to it. Let's start with some of the most immediate changes already happening within the Social Security Administration. President Trump has publicly committed to protecting Social Security, Medicare, and Medicaid, insisting that he will not cut benefits. While the benefit structure remains untouched for now, the administration has implemented a series of administrative reforms designed to reduce costs, fight fraud, and modernize operations. Under the leadership of Acting Commissioner Lee Dudek, the SSA has rolled out efficiency-focused policies in partnership with the Department of Government Efficiency. These include revised payroll systems, improvements in information technology infrastructure, tighter contract oversight, and cuts in agency-wide travel and printing expenses. Altogether, these changes have saved more than $1 billion, about 14% of the total administrative budget of SSA. That's a major step forward in curbing government waste without slashing benefits. However, not all of these reforms are without controversy. The SSA has also downsized its workforce significantly, cutting its staffing target from 57,000 employees to 50,000. While this move saves money, it has also raised concerns about slower service delivery and increased delays in claims processing. One particularly debated policy is how the SSA handles overpayments. Previously, if someone received too much in benefits due to an administrative error, the agency withheld 10% of their monthly payments until the balance was repaid. Now, the SSA withholds 50% of benefits until the full amount is recovered. While this may save the government an estimated $700 million annually, it's causing stress for many retirees suddenly left without a significant chunk of their monthly income. On a more positive note, the SSA is also stepping up its fraud prevention game. With new advanced identity verification tools, claimants can now file applications via phone without mandatory in-person or online steps, unless suspicious activity is flagged. This streamlines access for most beneficiaries while still enhancing protection against fraud. Despite the billions saved through efficiency and fraud prevention, these changes are merely a band-aid on a much larger issue. The Social Security Trust Fund is projected to run a $110 billion deficit in fiscal year 2025. And unless Congress takes more decisive action, the trust fund could be completely depleted by 2034. If that happens, Social Security would no longer be able to pay full benefits. Instead, it would rely solely on payroll tax revenue, which currently covers only about 77% of promised payouts. This could lead to an automatic across-the-board benefit cut of up to 23% affecting retirees, disabled Americans, and survivors alike. So while it's good news that benefits haven't been cut, yet the writing on the wall is clear: major reforms are needed to avoid a funding crisis. Thankfully, several legislative proposals are currently being debated in Congress, each with the potential to reshape the future of Social Security for the better. One of the most impactful bipartisan bills on the table is the SSI Savings Penalty Elimination Act, led by Representatives Brian Fitzpatrick and Danny Davis. This bill aims to update the outdated asset limits for supplemental security income, a program that supports low-income seniors and individuals with disabilities. Under current rules, SSI recipients can only have $2,000 in savings, $3,000 for married couples. These limits haven't changed since 1984, punishing people for saving or even getting married. The proposed law would raise those limits to $10,000 for individuals and $20,000 for couples, indexed to inflation, giving recipients greater financial freedom without risking their benefits. The second major bill making waves is the Senior Citizens Tax Elimination Act. Introduced by Representative Thomas Massey, the Senior Citizens Tax Elimination Act would remove federal income taxes on Social Security benefits. When this tax was first introduced in 1984, only 3% of retirees were affected. Today, more than half of all Social Security recipients pay taxes on their benefits, money they already paid into the system during their working years. Critics call this double taxation. Supporters of the bill argue that retirees shouldn't be taxed twice on the same income. However, the bill faces opposition due to its potential impact on Social Security funding, since around 4% of the program's revenue comes from these taxes. The other important bill in Congress is the Social Security Expansion Act. This is one of the boldest reform bills, championed by Senators Bernie Sanders and Elizabeth Warren. The Social Security Expansion Act proposes a $2,400 annual increase in benefits for every recipient and aims to fully fund the program for the next 75 years. The plan involves applying the Social Security payroll tax to income above $250,000, including capital gains, creating a donut hole where income between $180,000 and $250,000 remains untaxed, but anything above is taxed again. The bill also proposes using the Consumer Price Index for the elderly to calculate cost of living adjustments, which better reflects the real inflation seniors face. Another major proposal is the Social Security 2100 Act, spearheaded by Representative John Larson. While it doesn't offer the full $2,400 boost, it does call for a 2% across-the-board benefit increase and a minimum benefit of 125% of the federal poverty line, potentially increasing monthly payments for the lowest-income seniors by $500 to $600. This bill also restores benefits for students up to age 26, improves survivor benefits for widows and widowers, and expands eligibility for children being raised by grandparents or caregivers. Looking forward, President Trump has proposed eliminating federal income taxes on tips, overtime, and employee benefits, a move that could increase take-home pay for millions of workers. However, this could also unintentionally reduce Social Security's revenue stream. Since about 91% of Social Security funding comes from payroll taxes and another 4% from taxing benefits, any reduction in taxable income sources could further strain the system. Analysts warn that these proposed tax cuts could cost the program $1.9 trillion in lost revenue over the next decade, possibly accelerating the depletion of the trust fund by 3 years, pushing the exhaustion date up to 2031. To sum it up, Social Security is at a crossroads. On one hand, administrative reforms under President Trump are helping cut costs and improve operational efficiency. On the other, the system's long-term solvency is still at risk due to projected deficits and potential revenue losses from tax policy changes. Fortunately, lawmakers are taking action. Bills like the Social Security Expansion Act and the Social Security 2100 Act offer bold visions for a stronger, more equitable program, but they face hurdles in Congress. Other proposals, like eliminating benefit taxes or raising asset limits, offer more targeted relief and enjoy broader bipartisan support. That's it for today. Share your thoughts in the comments below. And if you found this video helpful, give it a thumbs up and don't forget to subscribe and turn on notifications. Thanks for watching Daily Dollars. I will see you in the next video.